Yo, good morning, everybody. Hope everyone's doing well. Yeah, it's pretty interesting how on Sunday, yesterday, or wait, yeah, yesterday was Monday. On Sunday, we talked about what could potentially take place. And it's pretty interesting how the order block has held, the inversion fair value gap has held, and the expectation of us dropping, going into these rate cuts that are coming and everything that we talked about, it's pretty interesting how all that's coming to fruition. You know, very, very quickly. So they're clearly in a hurry to get somewhere. And I wonder why. The rate cuts are going to have a huge impact. And I would not be surprised, like I've been saying, if we were to get down into here, sweep these people out to pair smart money buys with sell side liquidity from the higher time frame, to then look to go back on a rampage to the buy side, as has been the case for the next 6 to 12 months after a rate cut comes out when the indices are at all-time highs. It's very interesting to see that stuff come to life. But yeah, hopefully this isn't a surprise, right? We pretty much had a pretty strong expectation. I wasn't sure if today was going to be quick, but it seems like they're kind of in a rush. So what does that mean? If we see Sunday and Monday accelerate like this, going towards the end or more middle portions of the week, it may look to turn around, give a retracement. It's not going to just go one-sided. It might all the way down into here. But yeah. Oh, good morning, 95. Bro, let me tell you. First of all, I woke up late today. Okay. Second of all, I hopped on and pulled up all my charts and whatnot. And this shit's been so laggy. Like, I have no clue. Speaking of that, can you guys see everything okay? Can you hear me okay? Before we get close to the open. I just want to make sure because things have been real sketch. Yeah? Okay, good. I was really, really worried. I don't know what's been happening. Like, I would right click and this would not pull up. Like, at all. And then I would try to log into my broker. Like, I'd pull this up like this to look at, the brokers. And nothing was showing for like 20 minutes. And I was just waiting. I'm like, what the fuck? What is happening? So I was not sure if the stream was even going to be possible. But I guess things are working. Yeah, I appreciate y'all chiming in. What's up, Mike? Hitman, what's up? What's up, Tyler? But yeah, so you notice how Friday's low was taken, right? So even if price was going to come down here, the first thing that was taken was what? Friday's low. And then previous week's low. That's what this is. And then now we're getting down into here. So us breaking down below this low should be able to provide us with this as a balanced price range. You see how this fair value gaps traded once, twice through it, closed inside this breaker, and then we got down below this, changing the state of delivery. Used it as resistance. It was inside equilibrium from that high to that low. But now that we've ran away, turned this into an inversion, but not only that, turned this into an inversion, respected this order block, respected this order block, which is also a breaker. And now price has just been really accelerating. So because it's been pretty aggressive, they may not want to blow this out quickly. They may want to pull us back in to try to get people still thinking, oh, strong support, right? and then look to go down. I don't think bullishness is going to happen within the next couple days. I think that we are, in fact, like I've been saying since Sunday, and even when we were trading into here, when I was talking about the rate anticipation for the rate cuts, I do believe we're going to end up getting down into here, and like pushing a like a buy in here. It's going to be really risky given what we have ahead of us, like I said on Sunday. So hopefully this Sunday call was really clear, because these notes in here, we talked about all this in great detail, right? So hopefully most of you guys, if not all of you, were there on Sunday. So, because it's a lot of stuff that we discussed. We're not going to have time to go through everything as prices, actively trading if we're going to try to find an opportunity. It's just too much stuff. That's why the Sunday calls are very important, especially going into like Mondays and heading into Tuesday, right? So yeah. But yeah, overall, like I said, everything's been delivering how we want it to, right? It's kind of fell out of bed. DXY is accelerated, so I wouldn't be surprised if they pull back a little bit. Maybe sweep out some of this, then continue to go. We go to the DXY, we see that price is pretty strongly pushing up here. We got the wick midpoint here, failed to get up to it, right? Wick midpoint here, price did get up into it, and now it's attempted it multiple times. Let me move it up. So yeah, wick traded to, pushed away, traded to, pushed away, and now we're trading to it again. And structurally, things are still not transitioning overall to bullishness for the DXY. If we look at the monthly chart, right, you could still see that order flow is still bearish. But notice how this quarterly fair value gap has been used. We talked about this quarterly fair value gap being important all the way up here. Once it blew out that low, it came down into here, and now it's used it multiple times, numerous amounts of times. And now it's still holding price. And we're inside of a range. This range, I believe, all the way back from June, I believe they've been anticipating the rate cuts, because the rate cuts directly affect the DXY and obviously the other assets too. So, we're in a mode of anticipation as far as what's going to happen with those rate cuts. And so far, our anticipation that it was going to drop to potentially set up long-term buys for smart money as a result, it seems like that's pretty nicely playing out so far. So I'm not going to be willing to take buys in this scenario. Everything is going to be cut at half risk until we get the rate cuts, or a quarter of risk less than what you normally use. Because, we're in an uncertain environment right now. The uncertainty is so high. In this moment, we're coming off of a holiday, so it's already classified as a low probability scenario. And technically, you take this low to that high, we're technically in a consolidation, right? At least from the higher time frame, right? Within the high here and the low here. So I'm sure we'll be able to find something, as always, right? But I want to set the table for the risk environment that you're in. So you're not in there trying to over leverage, over trade, which you shouldn't do anyway, regardless of how confident you are. Leave that for the gamblers that don't know what they're doing. The people that are on the other side of our trade, let's leave it for them, right? So again, because this is quickly moved, as I've mentioned multiple times when this type of scenario takes place, a fast Sunday going into Monday, or even just a fast Monday going into the New York session, you want to anticipate that everybody is trying to short now, right? Everyone's thinking, oh, it's topping out. And then they see the displacement, and they don't really have the same context as we do, right? Thinking it's going to go lower, attack this, and go higher. They're just thinking that things are going to be done, right? They're just going to drop through the floor. And that may end up happening, right? But the floor, in my opinion, is down here. and then whatever happens over here, we'll figure it out. We want to see a buy from there, higher time frame wise. But up until that point, what we have currently is a fast moving Monday, fast moving London, fast moving start to the week, and you got to think power 3. It's the start of a new month, so the monthly power 3 is in effect. If this month is going to be bullish because the rate cuts, which is what I anticipate, this is absolutely 100% what you want to see. You want to see a quick manipulation, setting the stage for accumulation, manipulation, that then turns to distribution, which I'm assuming will kick in once we get to a higher time frame PD array that would support that within the higher time frame. Okay, because power 3 happens on every time frame. The ones that matter for narrative is the daily power 3, weekly, and monthly power 3. We're also, as you guys would have heard on Sunday, if you were here, we're going into a new quarter. So that means that we now have our new IPTA data ranges, 20, 40, 60-day look back and cast forward. So if we go to the first, we can now map that out and see short-term, intermediate-term, long-term pools of liquidity to start identifying. At least like a rough estimate, right, based on the IPTA data range logic. So you take the first of this month that has the shift from the quarter, from third to fourth quarter. Click here, we go over here. So our 20-day, let me move this. So this is our 20-day. You can see that there's not much, but within that range from the first of this month all the way to 20 days back, you can see right in the middle we have these relative equal lows. And so you can see short-term target is being attacked within the concept of power 3 on that monthly chart, right? Assuming that if it's going to go higher, since power 3 works the same way on every time frame, it's reasonable for us to think that the start of the month should go against the bullishness that was happening up until this point, and then target some form of a sell side liquidity pool and a PD array. So then that, sell side liquidity pool and the PD array can be used for the framework of the actual overall narrative that's going to unfold eventually throughout the month, kicking off the quarter, right? So there's that. Let's duplicate. So we're basically mapping out liquidity, okay? Just another form of liquidity mapping we talk about. And then the 40-day is out here. And again, like I said, you take from the 40th day, looking back, you move it all the way to the 1st of September, and you can see what liquidity is inside that makes sense to be targeted. In this case, with the narrative that we've painted so far, to go for price to start the month and quarter and go lower to go higher, this just makes sense how this pool liquidity is a target and this one's a target. Clearly, this one's going to potentially be broken today. Okay, and then we'll see what kind of takes place. And once we break this low, you take this low to the high up there, that's a balanced price range. You see this fair value gap? When price decided to break through it, what did it do? Well, first of all, use the order block here within the breaker, within the fair value gap. But this fair value gap has now been traded through with a displacement. So that creates this as a balanced price range too. But this low to that high should be expected to resist price. If we're going to be correct, at least from this low to that high, the midpoint should not be returned to. If it is, that becomes a problem, and it's less likely that we'll get down into this fair value gap and do this strong rejection. There is a chance for it to sweep this, take this, and then go. If we get above this high as a result of that, leaving these areas, then there's no reason to think it's going to go back down there. But so far, this middle portion from this low to that high, that's my overall line in the sand to turn off the interest for price to want to go lower, and it would kick us back in line with trying to seek buy-side liquidity. Okay, but again, that's contingency for what we're trying to see, like the opposing view, right? And we're going lower to potentially go higher later on, as a result of the rate cuts. That is our catalyst to get us back in line with a healthy buy-side delivery. And it needs to be coupled with the higher time frame PD array. Time and price, okay? Beautifully on display right there, how you use it and why it's important from these higher time frames. Okay, so now we've got 2040. Look back, and now we're going to go to the 60. See what we got. So we got this low. I mean, that's real close. Isn't it ironic that this is the 60th day, or close to the 60th day? What is it? 63rd? I mean, that's close enough to even be classified as the 60th day liquidity pool. And isn't it ironic how that aligns perfectly with our weekly fair value gap? It's very interesting how this stuff just lines up together, It shows you there's a method to the madness and nothing's random. So again, we got this liquidity pool, these relative equal lows, this relative equal lows, displacement, respect of this breaker, inversion, fair value gap on the daily, and now we've overlapped this, and now we have a low to high. If it breaks below the low here, that's going to be a balanced price range. And so all of this stuff confirms that order flow for now has now shifted from going higher to bearish. Okay, bearish up until we get down to a level like this. Okay, and then we'll see what price wants to do there. If it just breaks down through that, then, it's in an overwhelmingly bearish environment then, right? And we'd have to wait for this to get inverted and start to see some serious displacement back to the buy side to even start to consider changing our opinion again from now bearish to bullish, right? And again, I think the rate cut, it'll give us the reason to go higher eventually. But for now, buys are off the table. Okay, bullishness, there's no need to push buys just because you've been bullish and we've been bullish and it's been going and we've done very well going higher and been correct for 8 straight months. We're going to go on 9 months now. See if we can keep adding months of being correct on the higher time frame. Again, you guys could review that if you haven't been here. You could review that we have literally been ridiculous when it comes to identifying where price is going to go. It has not gotten away from us yet. So I don't really think it's going to get away from us now. So yeah, that's setting the table, right, for what we have available so far. And hopefully it makes sense. Again, if you guys are new, there's a lot for you to learn here, so don't be discouraged. But if you've been here for a while, hopefully this puts a twinkle in your eye, okay? Makes you feel butterflies of how amazing it's been for us to be so in line with the market. It's like we're connected, right? It's like we are the algorithm, right? So we'll see if that continues. But yeah, do you guys have any questions before we get into the open? Because we're going to be focused on trying to identify an opportunity. And we'll maybe after we get through the first 2 hours, I will open it up for more focused time for questions. You can always ask questions at any time, right? And I'll try to address it. But yeah, if you guys have any questions as we go into the AM session open, let me know. But hopefully this higher time frame makes sense. Can you give me a 1 in the chat if what we've talked about since Sunday makes sense and you feel the table has been set properly for you or in a way that you're going to be able to be comfortable? Just put a 1 in the chat if you agree with that. Okay, Tyler, you agree? All right. Yeah, we got news at 7. Or in what, 30 minutes? 38 minutes? All right, appreciate you guys for confirming that. Appreciate it. Mike, Hitman, 95. Appreciate it. Just a reminder too, if you guys get value from the content and you like what we do here and you've been seeing us be effective and it's been helping you, definitely don't forget to like the video. It does a lot for the channel to be able to get in front of people just like you guys that are here on a regular basis that have been growing and learning with us and taking the information and seeing results. So yeah, if you guys could do that for me, it is much appreciated. You're helping support me as I'm trying to help support other people and pull them up. You know, we're trying to put a hand backwards, right, or a hand down to lift people up. And I think we've been doing a great job this year. And you guys are all a testament to that. So I appreciate the support, right? And if you're new, welcome. Okay, there's a lot to learn, so you know, stick around, right? You're gonna learn stuff, right? But yeah, so now we can kind of move a little bit lower in time frame since we set the table already. And what we can see here, I mean, this looks like a market maker sell model. Okay, and it makes sense that this low is now pretty highly probable to get targeted, at least in my opinion. Obviously, it's been super aggressive. So when we have a very fast previous session or a fast start to the month, start to the week, start to the day, you want to expect that off the heels of this type of movement, everybody and their mama is trying to sell now. They think that everything's stopped, and because price is going down, they think that means sell, right? We are of the opinion that it is going to go lower, right? I do think it will go lower, but we're not going to get in there and just sell because price looks like it wants to go lower. We have time we have to wait for, which is the open, and we have macros, which are the last 10 minutes and the first 10 minutes of every hour. So 6:50 in this case, because I'm on Pacific Standard Time. Okay, 6:50 is going to be the time that we are going to look to potentially identify an opportunity. We're going to let the first 30 minutes play out. One thing I want to highlight before, so we have a good understanding of where this is at, I want to highlight the regular trading hours gap. Okay, so this is yesterday's close, 23,465. Okay, so if we come back to the regular trading hours gap, or the electronic trading hours, you go up and look, 465 is up here. So we now have a giant, massive premium regular trading hours gap. Okay, so that regular trading hours gap is probably going to act as a magnet and support what I just was talking about in terms of the fast movement leading to price wanting to go against that as we go into the open, to simply come back and fill in some of that gap that's been left, because we're now opening at a discount relative to yesterday's close. So because of that, we may see price want to be magnetized up into the regular trading hours gap. Doesn't have to fill it entirely. I would not expect it to do that. I don't want it to do that. If it does, you know, obviously we'll make those adjustments if that happens. But I do think that there's going to be a high likelihood of this running up pretty aggressively. Maybe it comes up into here, right? Maybe it, you know, comes up and taps into this. That may be an order block right there. Let's go move up and see what we got here. Yeah, so we got an order block here. We do have the up delivery in here, so it may not need to come up into like a deep level. Again, that regular trading hours gap is going to prevent this, right? Or give them the interest to prevent this from being targeted quickly. And it's going to pull people in to trap them. And then it's going to probably smash lower quickly as it decides to violate this once they're ready. All right, so that's what we're going to mainly focus on. You know, it may set up a counter trend move. If you guys have been here for a while, you know that I don't take trades right at the 6:30 open. We're going to let things play out a little bit. Okay, we're going to let gamblers take the first casualties, okay, and try to force things too early. And we're going to see how smart money wants to treat this, and we'll see what the open brings. And then we got the first presented for value gap that we're going to have to identify. Okay, we got London's high, London's low. Not necessarily useful, right, for the time being, because it was so quick. This technically is still London's low, because we're still technically in London session. It just overlaps with New York. But the low that's within what is it for PST? It's 11. I think it's 11 o'clock. Let me see. 22. Is that 10? Oh yeah, 11 to 2 o'clock. So the lows in there, if we're trading within that going into New York, that becomes important, right? But you can encapsulate the whole entire move up until where we're at right now in the low that's here as a London low. But yeah, we'll see, right? We'll see what happens. I would like them to pull back a little bit more aggressively, right? Before they take off. It may just melt, right? But our expectation, given statistical information and how repetitive it is when a fast move happens, how repetitive it is that they'll pull back pretty aggressively to fake people out, then go a little bit later in the session. Because that is a risk, we don't want to chase anything. It would be an aggressive idea to try to push this as a short right now. Doesn't mean it won't work. It just means the risk is more elevated for this potential idea. This is technically a run on stops. This is technically a displacement shifty market structure overlapping fair value gap here. So this may result in an aggressive attempt to want to go lower and blow these lows out fairly quickly. I do think that because it's been so fast, if price does quickly get down below this previous week's low here and doesn't show any retracement at all, we still have that regular trading hours gap that's above us. And they may look to come down here, purge these people out because everybody sees these equal lows. Okay, and then use that liquidity to trap traders in even deeper and then really, really whipsaw back. And then maybe spend a little bit of time before it wants to go lower. Once more headed towards these sell-side liquidity levels that we've been talking about. And it's ironic that all of this is now opening up and now we see correlation happening within the bonds and the yields. Okay, the yields are running higher. What is that doing? It's causing the DXY to have excitement to the buy side and bearishness to start getting excited for the bonds and the indices. So you see that when correlation falls in order, things become real interesting. Okay, you guys that have been with me through the summer months, you've seen the difference from the start of the year, how smooth it was, and then it got a little shaky from June to August that just ended, and now things are now kicking in line with correlation, and it's looking real smooth and quick, fast, you know. So yeah, there is the fast movement, right? The aggressive opportunity I pointed you to, obviously delivered down through that. This is just, it's too quick, right? It's too early and it's too fast right now for me personally to feel that I want to go in there and toss something in. This regular trading hours gap up here is something very significant. Now let's observe for our first presented fair value gap. I want to see how we treat this low. If we overlap this fair value gap here, say it takes the low like it is here, and then it overlaps this, comes back and uses it as support, that we could target a little bit of these upper levels, maybe even attempt to get up here. Probably wouldn't get up there if it's going to be very quick, but I'm personally going to be just observing here. Like I said, you can make an argument for aggressive executions, but if you're following my rules, I don't take trades within the first 30 minutes of the open because you could very easily get caught up in manipulation, and it's just too early. You know, why be a gambler? Wait for the better times. You know, and if you go back and look at your performance, I'm sure that most of your losses, maybe y'all will agree because maybe you've observed this, but most of the losses that you take are going to be prior to 6:30, the actual open, or within the first 30 minutes. That's a time when you could have the daily bias correct, but you'll be caught, unfortunately, in the manipulation because it drags through that time. So a lot of times, if not, and it just accelerates, then it just accelerates. But for the most part, this is a characteristic that I've personally noticed, both with my own performance over the last 6 years and my students, right? You guys, you know, I've seen that a lot of you guys that send me videos or like videos of, you know, your executions or just your executions in general where you took a loss, the first thing I look at is the time. because it's so important. You know, if you're not aware of the time elements and the role that each time element plays within the daily or weekly or monthly range, it's very easy to get stopped out but still be correct. You know, so I'd rather personally catch a later entry with smaller leverage and not catch the first entry if the timing's off. Okay, it's just because it's the risk is too much. It's too high, and you have to learn how to lose less. And this is one of those things that helps me and has helped me up to this point lose less and win a whole lot more. And it makes my bias and narrative identification much more worthwhile, I could say, right? And just reliable, you know. So yeah, now we're overlapping this for value gap. So like I said, let's see what happens. As we swept this low, what's it going to do? Is it going to take that and trap traders in? If you were smart money, if I was smart money, I'd be like, hell yeah, let's trap them in, make them think this is strong support, and pull back on these people that are all winning from overnight because they are probably all dumping in pyramid entries. They probably think they can't lose. So let's go punch these people out, and then this could be our opposing liquidity. And then if we get another displacement that sets up our model closer to a better time element, then maybe we could frame something inside that. You know, but yeah, this is a huge regular trading hours gap, so it may not, given the size of it, it may not have to get all the way up here, but I do think that a shallow retracement could still take place. That's what I'm going to be watching. And then once it does take place, and if we could take out some of this liquidity here, I will be on the prowl to see if there's any type of short idea. Once we get above this high, though, that may also set this up as a potential bullish breaker. This overlap here, right? And maybe you thought in a confident way that this overlap, which I identified, could have been something that makes sense to you for a counter trend execution. Using the inversion fair value gap, which is also a balanced price range, because it's got overlap here, right? So you got to just figure out where you sit, right? And what, excuse me, you know, what makes more sense to you, right? But we're able to navigate both sides. So hopefully you can make that determination, because I can't tell you what's going to be comfortable for you, you know. I'm telling you what I'm waiting for, right? I want to see how we treat this. This was to be expected, right? I mentioned, let's watch what it does here. Is it going to retrace here? Because this is good for me to try to position for a buy at some point. An aggressive buy, which I would not trust, would be to consider this high getting swept and then trading this high to that low as a BPR. I don't think that's going to happen. Mind you, the narrative on the higher time frame is what? We want to see it go lower to start the bearish power 3 and hit a higher time frame PD array that's going to potentially give us a reaction headed into the rate cut. We're still too early. We still have that hanging over us right now. You know, and if we have to adjust eventually and, you know, assume that it's not going to reach down to those deeper levels, then, you know, we'll make that adjustment when the time comes. I'm not of the opinion that that's going to be left, at least for now. So I want to see it get down there. So we'll see if, you know, we can get that. But yeah, the middle portion of this order block here has been violated for the weekly bullish order block. The 50% level of the wick here has now been completely violated and traded through, and we've swept that low. That's the previous week's low you just saw here. And so you can see how that weekly low being swept, since it's a higher time frame, has created a pretty large response on that lower time frame, or pretty dynamic, I should say, right? You took the first overlap. Good, Mike. I'm proud of you, bro. Good on the confidence and independent thinking. You know, that's exactly the type of experience I want you to have. You know, because I'm not here to put you in trade so you could just copy me. I'm here to make it so you can copy yourself. You know, and the way that I teach has that in mind. Every single thing that I mention and say, I keep that in mind. I don't want you to be a signal junkie. I want you guys all to eventually hang out here as an equal to me. I don't look down on you for being new, right? Any of you. Okay, I don't think I'm any better than anybody else, and I don't want to be looked at as if I am. But I do have things that can help you, and I want you guys to consider the things that I say and try to become your own trader. And I want you guys to all eventually be hanging out here just to hang out because you like hanging out here, and maybe you want to help me on the mission of helping people, Eventually, that's what I want the vibe to be, so that I can have just like a bunch of traders that are highly effective, doing things that most people cannot do and will never do, because they just simply don't have the mindset for it, And I think I personally can have a bigger impact by building good traders that can help me eventually, So it's kind of like where my head's at with signals and what my future goal is for the channel. Notice it's not anything like super maximalist, like I need 1 million subscribers, right? I want us in our little corner of the internet to be able to have an impact on the trading community that has, first of all, done a lot for me and many other people, but can do so much for anyone that's been struggling. It could get them over the hump, and see this industry as the amazing industry it is, not the toxic, egotistical, scam artist vibe that a lot of people have about the markets, unfortunately. But hopefully what I do is helpful to you guys. But yeah, so given the fact that we have that reaction, Mike, since you took that, you need to get out of it. Okay, it's moving fast. I'm out. Beautiful. Can you please, Mike, since you're in the private group, can you send your result in the student markups? I mean, you could post in the community chat wherever you want. Yeah, I want to make sure you're acknowledged. Anyone else that's in the private group, some of you guys are here, but if you took an execution on anything we've talked about or are going to talk about, make sure you post it, right? Because I like to see it, right? I like to see it, but it's also good for students that are part of our private group, and I mean here on YouTube as well. It's good for them to see that it's not just me. Because if you see just that mentor being the successful one, something's not right. Either their stuff sucks and only works in their hands because it's for whatever reason, or they're not really teaching that great, so the students can't benefit. So I like highlighting that you guys are crushing it, right? And a lot of you really are. So. Man. So yeah, this was a pretty nice response. DXY is falling. So again, shorts are not of interest yet. Remember, I said I want to see how we deliver when we get up here, and if it can set up something inside of my model, one of our models, one of the 4, then we'll look to participate and try to target something below. There's nothing wrong with identifying this as a counter trend move. Like I said, this first overlap was highly probable that it was going to sweep this and then yank them back to basically trap anyone going short that's been short overnight, or anyone that has like a sell stop trying to target that, use it as resistance. Yeah, how did that work out? Right? Most of the time when a higher time frame levels hit like this is the expectation. I hope I haven't had a chance to ask you guys in my private group, or even you guys here. I think I mentioned it here on Sunday, but you guys should have been looking at the drill I told you to do, which is identifying how price responds when it takes higher time frame liquidity pools, right? And what happens when it hits a higher time frame PD array. A high and a low on the monthly or weekly or daily or 1 hour or whatever time frame, that's a PD array. But of course, you could separate it a little bit for study purposes and just look at it as a high or a low on the higher time frame. Whatever makes you comfortable and clear as far as what you're looking at. You're going to do what makes you comfortable. But the idea of that drill is to help you get comfortable with what happens when price achieves this type of price delivery, right? It sweeps the liquidity, and then most of the time it'll be trapping them in below that low. And then it'll come back and try to purge out whoever's short, right? Whoever's rushing their stop. So right now, both seats have been taken, right? And we're inside that higher time frame potential bearish narrative. So this, I'm not expecting this to just turn around and come all the way up here, right? If it does, like say, get up above these levels, this will then be looked at, in my opinion, as a market maker buy model. I'm expecting that scenario to fail if we are going to look to have that strong movement to the sell side, to target that weekly fair value gap and those equal lows. And then assuming that this is going to fail too, right? It should support it doing that. And it's the start of the month, the start of the week. It's the start of a new quarter almost, right? The 16th or the 17th, sometimes the 15th, depending on what they're doing on the back end. Around that time is when the contract month will be fully changed. It will be fully in the fourth quarter. And that's when you would then change your, if you trade futures, that's when you would change your contract month to the fourth quarter contract month. And I have all the letters and, the letters that represent the different quarters. I have all of that in the free group and the private group. It's earnings information. That's another thing. Lots of earnings are coming out around times when the quarter changes. I have the specific dates within that same information too. So go save that and put it in your journal so you can always have a reference of that information, because that's very important. When you're around earnings season, which is a couple times a year, things get real crazy. Cracks and correlation can be available, high volatility, and you just never know what's going to happen, because someone could miss their earnings, or CEO could do something stupid or whatever, and it could have an impact. And if it's on assets like Nvidia or any other big tech stock, or Tesla or whatever, and it's highly negative, since those are some heavy drivers in the like the Nasdaq, that can have a negative response. And if you don't know that the earnings are there and someone missed it, right, or had some negative result, you may not expect the negative reaction, right, or the downside response, or the sporadic volatility injection that takes place as a result of something like that, right? Yeah, so this is a pretty damn beautiful rejection here. So again, I'm going to be waiting. This would have been, like I said, an aggressive opportunity because we're still within the first 30 minutes. And now we're going into a macro. We're within 5 minutes of the macro. So, if you use my rule, or just the rules in general about the macros, saving your execution until a macro forms, that would put you right in line with taking this opportunity here to go higher. Right, but I'm personally waiting to see if the DXY can rebound. It is kind of just range bound still, so very, very risky, especially because we're at the beginning of the month, and it's the beginning of a new quarter and a new week, right? So that's a pretty large wick off that low. So it didn't close below it, so again, we're going to need some displacement to start thinking that shorts are going to manifest. But yeah, if you took the buy like Mike did when we talked about this inversion, that was the first decent move for the morning. A little bit aggressive, but the logic's there. The reasoning is there for why it did what it did. So yeah. Actually pull some of this up. Yeah, we got relative equal highs here. A little bit of a fair value gap. So we'll see how it wants to treat the middle portion of this. This right here looks like a market maker buy model. Go to like the 5 minute. I'm sure probably has all the signs of it. Yeah. Consolidation, accumulation, reaccumulation, smart money reversal. First stage. They didn't really have much of a first stage distribution. It kind of just blew past it. Blew past the 50%, right, of the range from this high to that low. So we'll see. We'll see if it wants to get outside of this sideways meat grinder in here. But yeah, this continuing to go higher like this, if this continues and leaves the fair value gap down here and we like never revisit it, or we stay above this, that's all signs that we're just going to continue to keep going higher, and that'll basically support this continuing to go lower, even off the heels of this pretty decent retracement. Mind you, we said that this retracement was highly likely. That's why we weren't pushing shorts. And aren't you glad you're around somebody that knows what the hell's happening, right? That tells you what could potentially be ahead of us. And Mike, you taking that execution, and any of you guys, if you took that execution, that's an absolutely amazing setup. Just keep in mind it is a little bit more aggressive. But when you know what's happening, you can be aggressive at times. And if you're not going to overtrade and over leverage, you can feel confident and not fearful of anything. And I really hope that that I'm allowing you guys to develop that mental confidence and just confidence in yourself. Because, you know, that's a big goal of mine when I'm here live, trying to give you all the elements to help me be confident, so then you can also be confident as well. Yeah, moves are huge, reduce risk. Yeah, Mike, I totally agree. We started the call, obviously, saying that it's going to be a time where we want to make sure we lower our risk, at least by 25% of what our normal risk is, preferably half, in anticipation for the rate announcement. You know what I mean? Thank you for posting that, Mike. Appreciate it. Seeing this live is I'm glad you think so, Tony. Man, at this point, Tony, since you've been here since the start of the year, I mean, you have seen every single week for 8 straight months. Now we're going for 9 months straight. Imagine if it ends up being an entire year where every single month we knew exactly where price was going to go. It's been that way in my private group for 3.5 years. Every single year, you know, there's been some times with like the election and whatnot, the previous election, that kind of, you know, was a little crazy. So it's to be expected that we're not going to be as accurate in a time like that. But for the most part, I mean, this will be my first time live on YouTube where I was able to call bias and narrative for 12 straight months correct on the higher time frame. You know, of course, bias and higher time frame narrative doesn't always equate to you being a good day trader, right? But even on the lower time frames, I also couple the higher time frame success with my anticipation of what's going to happen, like what we just saw here. And that's been happening every week too. You know, there's been some times where we've had to wait. There's been times when we've taken a loss. But within the grand scheme of things of where price is going to go and how we navigate, even after we take a loss, I mean, I don't know how there's much of a comparison. You know, unless there's someone that does this, right? Like ICT or some other ICT traders. Most are not live doing it like this. You know, there's a couple that do. My good friend CJ Trades, he's someone to follow too. He's a charter member and one of my really, really, really good friends. So shout out CJ. Because, yeah. Haven't talked to him in a while. I probably got to check up on him. But yeah. There's not many people that do what we do at the level of consistency that we do it. Just with bias and narrative alone, let alone having the confidence to come out and execute and say, oh, this is a good idea here, you know, or, you know, this is not a good idea or whatever, and put their opinion on the line. Not a lot of people can do that. So remember what I talked about the regular trading hours gap? I said there's a chance for it to come all the way up and use it as a magnet. because it was so large based on the rules ICT gives us, I did mention that it may not, right? But obviously it has. And I also pointed out these equal highs here as a possibility. And again, this, if it just really picks up here and doesn't give us a reaction from, this area, like to the downside, we may see price want to come up here, and it may upset, at least the timing, in terms of price wanting to dig lower. I don't think that's going to be upset. I think this is just simply doing what we talked about it doing, given this strong rejection because of the fast-paced delivery that previously took place. All right, so yeah, let me actually fix this monthly open. This was last month's open. You see how last month's open, or July's open, right? When it opened up, it declined. Oh wait, that's August, my bad. So August opened up here and declined to the low, and then created a bullish power 3. But then kind of was a bit nasty, right? But all in all, it closed in a bullish fashion, right? So power 3 was on display there. So we're going to do the same thing with this, right? So this is September, so the open is there. So now since the open is here, so the open's right there. So yeah, that open price, we're going to keep tabs on for the month. So if you keep this here, you'll be able to keep yourself calibrated, just like how we do on the weekly and the daily chart with those open prices. You could do the same thing with a monthly candle, right? So that is what we're going to keep on our chart. So if you look at this, right, this here is the current hourly candle. So the open on the hour was over here at 6 o'clock. And notice what it did. It declined below the open. And that manipulation below the open took out a sell-side liquidity pool, the previous week's low. And then price displaced higher, right? So it created this bullish power 3 on that 1 hour chart. Right, within the context of everything that we talked about, right? This low being taken, triggering in the possibility for a rejection, right? The fast-paced delivery in London. The premium regular trading hours gap that was left widely available for basically a target, which fits the potential punishment of anyone trying to chase these shorts as a gambler, okay? And the 650 opportunity, like we've been walking through, obviously, turned out to be when we shifted above this high. See, I wasn't too sure exactly how far this was going to go, just simply because that's uncertain, given how fast it was, given the overall things we've been talking about in the higher time frame. But nonetheless, can you see yourself bagging 20 to 30 points in there? Right? I'm personally wanting to try to see if we could get in line with the short. But, if I wanted to be aggressive, right, I called this out. I could have executed if I wanted to. I didn't feel like it. I'm going to wait for the more lion's portion of the weekly range, right? I want to see if we can get the delivery pushing us down to the sell side. But again, if you thought that this was a good buy, as I pointed out, it could be, and it's shown to be, right? There's nothing wrong with that opinion. Some students like Mike took it, and again, I'm grateful for the independent thinking. Take my analysis and think about how it fits within your view, your overall engagement and what you're comfortable with. I'm not here to push you into my mold. I'm here to push you into your own mold, okay? And give you the logic and information that allows you to be an independent trader. So yeah, hopefully it makes sense as far as why this could have been reasonable. If you didn't take the aggressive first one, maybe you could have taken this one within the breaker. Like I said, this was going to be a breaker when it got above this high. And that was a shift. Not only that, there was also another shift here. So two shifts in market structure, pushing up to logical equal highs, a new week opening gap. And again, all of that was off the heels of the fast movement overnight and yesterday, which then hit an opposing PD array, which a lot of times triggers in a rejection, like you see here. Okay. So we're inside the macro. So let's see what the reaction is going to be from this movement higher. So yeah, 50.1 minute candle. Yeah, Mike, isn't that crazy? That's a pretty wild candle. We got news in 1 minute. Because this happened before the news, this may turn out to be the manipulation, getting us above that 6:30 time, the open. The open price up is way up here. So for power 3, because this open price overnight is so far, if it is going to be bearish, the power 3 reference you would use is 6:30. Okay, here comes the news in 20 seconds. I know there's probably a lag going on. Hopefully not. Hopefully it's not too bad. First presented fair value gap. Okay, let's see. Let's see what kind of fireworks are going to take place. It's a pretty large wick. Pretty large wick below that liquidity pool. We shall see what that wants to lead to. Again, if it was to get up into these deeper levels up here, that sets the stage for us to come up to the deeper equal highs up there. And then it kind of like, sidelines the decline interest. But of course, we're not there yet. This could still very easily just be manipulation, and then they'll use the news potentially for this retracement to then kick us back in line. And again, if it does start to push lower, we got to keep tabs on all these fair value gaps in here and see. Oh, whoops. And then we'll see how the reaction will be. Notice how that's a fair value gap in an order block. I talked about this order block in here, right? I said this could be where it reaches for. I would have preferred it not do that, but it did, right? So still within the narrative, still within our opinion of what we thought price was going to do, which was exactly this: take the low and then reject aggressively to punish anybody that's been shorting in here, because they're the ones that are in profit right now, right? Contraction in manufacturing. Oh, that's from that news? Okay. That's negative news, right? Contraction in the manufacturing of goods. That's not something I believe is positive. I mean, it just further layers the narrative, right? With news and technicals and everything else, for price to want to look to take a nosedive ahead of the rate cuts. That's going to most likely send price higher, as it has 100% of the time the last 20 times. For the 6 to 12 months after. But yeah, so this is nice. We got this order block in here. Again, if it was to displace and close below that and start to get down below these levels, it's starting to speak to you, and tell you, hey, I may be ready, right? So you'd have to look at your model and see if there's something in there to participate in. So yeah, we swept out these highs, hit a PD array, be in the order block. So it's a 1 hour order block. That's a nice PD array to potentially see a reaction from. right? Let's see if it can manifest a displacement and start to get us down below some of these other levels. Mind you, we're in a new hour, so now we've opened up. Here's the hourly candle. Okay? This is the current daily candle. It's a bearish daily candle, and the weekly candle has so far been bearish. And looking at the screen so much, I mean, I'm already starting to feel it kind of mess with my eyes. If you guys don't have blue blocking glasses, I've said it before, you want to get them for long term, because I didn't think it was going to start to bother my eyes as much as it does recently. Unfortunately, I'm probably going to have to darken my my layout eventually. You know, it's one of those things, right? So yeah, let's see if DXY can eventually look to slow down to the downside. Let's see if it can get a little more traction to the buy side to give us that push lower. Yeah, so I'm watching the fair value gap relationships. We do see that we took out highs. Let's go check these highs up here. We do see there's an SMT there. See that? Right there, failure swing. Man, what a one-sided delivery though, huh? Like I said, they're gonna want to punish these people because it was so fast. This is a beautiful example of why you don't go into a session that's been super aggressively one-sided overnight, or even from the previous day. This is why you don't go in there rushing to try to get in line with that, like you missed the short. You know, wait for it to set up, you know, because this is highly likely and highly repetitive. Okay. So yeah, let's see how it treats things like this. So the S&P and the Dow have made failure swings. The Nasdaq has been the strength holder. Strength. There's no buying and selling pressure. But they were more interested. This crack and correlation tells you smart money is in play. It's in some form or fashion. That's what cracks and correlation tell you. Something on the back end is being done. Now, is that something loading up of short positions? Right, this low, high, lower low. We're going to have to stay below this, the center portion of this, and this upper delivery, right, low to high, should be able to be a little balanced price range. And if we can overlap these fair value gaps here, like this one and this one, while staying below this, keeping that SMT intact, those are early signs, pretty clear early signs, if we can get DXY to rally, that we are now within the timing element that could push us to the downside, and price will be ready, especially off the heels of this very aggressive run to the buy side. I'm not about to pick a top though, so I'd rather it get down below here and then look to consider finding my model if it shows up. No model has shown up in here. The only thing that showed up as far as what we use within the four models breakers, YouTube model, institutional order flow entry drill, market maker models. Right, within that, nothing has happened in here. Right, looking at it from this time frame, taking it up to the 30-minute, things get a little more clean. Like I said, it goes up, it's went up into this 1 hour order block. So let's use this as a reference here. I could say if this inverts with displacement and DXY can get some legs, we may be setting the stage to go back down to this sell side. And this will have been what we talked about in terms of a rejection, retracement off the heels of a fast overnight to then look to deliver further off the heels of that, and then the SMT here too. Notice how we hit the regular trading hours gap. What a beautifully algorithmic assumption. It's beautifully tapped it. Look at that. You can't do better than perfect. Right, like that's just damn near perfect. When there's a regular trading hours gap too, right, when it's big and price has been delivering like this, there's a 70% chance, at least that's what ICT says, but there's a 70% chance that the middle will be either somewhat traded to or traded to exactly before price wants to continue whatever it's trying to do, if it was to continue, in this case bearish. Looks like that 1 hour power 3 I pointed your attention to may in fact be unfolding here. Looks like this breaker, this order block, this balanced price range, this 1 hour order block, right? It looks like these things are holding in here right now. See the wick here? Couldn't even make it to the 50%. I guess it did, huh? Let's see, was it perfect? Yeah. So yeah, we'll see what it wants to do. See, DXY is coming into a fair value gap, so we might see it run higher with the sell ideas. Yeah, that's what we'd ideally want to see with the DXY. You talking about this? Oh, this one right there. Okay. Oh man. It's really bothered my eyes today. Holy crap. Man. Sorry about that. It's really bothering my freaking eyes today. But at least we've been right. We've been right. So that's all that matters, right? Well, why we've been right. So yeah, we're monitoring this now. Let's see how it respects this. DXY is going to have to turn around at some point if we're going to be able to consider shorts. With this delivery in here, this right here will be my sell side trigger. Otherwise, it'll probably try to keep pushing higher. This is one I would consider potentially framing out a short. Right, if we leave this intact, shorts are not available. Right, we're moving in the direction of obviously buy side here. There hasn't been point in time where shorts have turned back on. So, you know, sometimes you just got to be patient. We're inside the silver bullet. Okay, so we'll see what it wants to favor. You know, we have hit these levels up here, these opposing PD arrays. Notice how that opposing PD array on the 1 hour triggered in a lower time frame reaction. Just like how when we hit opposing PD arrays on the higher time frame, that's when I have taught you guys to be able to frame out a counter trend idea, or when price, like the time when price is going to give a retracement from the higher time frame. Same thing applies when you go on like the 1 hour and price is moving like this and it hits that 1 hour area. All right, so let's watch this low here. This low to this high would become a balanced price range. All right, buy side taken here. Sell side would be taken. And that should potentially create a potential scenario that would send us lower, assuming that DXY goes higher. It's less trustworthy if DXY is just going to keep melting, you know, so yeah, they've taken buyers for a ride for sure. Now they're going to take them to the graveyard, in my opinion. I think they will potentially start to smash. If they break this low and get below this fair value gap, that just sets the stage for all of this to be wiped away. And this is a shallow purge below the low, below that previous week's low. Where the... Oh. Yeah, it's previous week's low. Man, highs have never been this bad today, or just in general, they're really bad today. Yeah, there is the purge below the low, so this low to that high, if it's going to go lower, it's going to have to hold that. So we'll see if that is what's going to happen here. That's what I would like to see. Let's see if we can get that. If we do get this to drop right here, this is going to be a good example of pre-market or pre-news manipulation to then use the news to give you the real serious move. I can say also if we get up above this high, this becomes a bullish breaker and buys will probably continue, and then it may want to dig into these a little bit deeper levels. I would assume it would be the highs up here. So yeah, with DXY declining like this, it's really not supportive of this delivery below this low, ending up declining aggressively. It's not supporting that right now. We have to see DXY start to open up again. But what it looks like so far, it doesn't look like it is highly probable that it's going to open up. We'll see if that changes, but for now, this is not a short I would be confident in. Maybe I'm wrong, right? Maybe it'll react from there. So far, it don't look like it. So yeah, if it was going to be supportive of this being the move to go lower, this would have rejected. You see that it's not. So now it looks like it's creating a bullish breaker. Back inside that new week opening gap. Yeah, within this 15 or this 1 hour, 30-minute too. It looks like we still got an argument for this to simply have been just a retracement. So we're not entirely out of the woods for that assumption. So we'll see what happens. DXY is starting to top out a little bit, or at least give somewhat of the view that it may be holding within this new week opening gap. If it breaks this high though, my attention goes up to here. I prefer it hold in this and go lower, but if we have to be flexible, which it looks like we're probably going to have to be right now, they're really not interested in catering to shorts at the moment. Yeah, eventually I'm sure they will. And then get us to that weekly fair value gap and those equal lows. We still got this order block here, so let's see if this is just time distortion. See what happens. We are holding above this fair value gap, so again, it's making me lean a little bit more towards the fact that we're going to get up here. But yeah, I'm going to continue to wait. So yeah, now we've created a bullish breaker. The news didn't really do much, huh? Just kind of opened up and taking out that high. So let's see. This breaker candle, we need to stay above the midpoint. If this is going to hold and get up here and not go lower, it's going to stay above the midpoint here for this candle's high to the low, because it's the breaker block. So yeah, looks like that's the case. Eyes are killing me right now. First presented fair value gap of the hour. Yeah, the current hour. I'm talking about like that right there. Oh, actually right there, huh? Let's see if that fair value gap can hold it. But yeah, until it breaks down, shorts are not of interest. But yeah, I do see this as a potential breaker, and this right here, if DXY doesn't slow down, it looks like it might be slowing down. So things may change, but we'll see. We'll see what happens. See, that breaker right there looks way more effective than any type of idea to go short, right? We watched what happened in here. It just denied that, so no execution was given. No fair value gap was available, nothing. And now we're delivering above this, holding above the middle portion of this high to low, right, the breaker. And so there's nothing in here telling you to push a short. There's nothing telling me to push a short, right? And we got this fair value gap here. Let's see if it inverts it or just reuses it as support and goes targeting this up here. see what happens. What are the other indices doing? They all look like they have a very similar vibe, just retracement. Because we're looking at this price delivery on this lower time frame, the breaker and whatnot. This breaker is subservient to this 1 hour potential framework to go lower. And you can see this too. If we get below this low, these down movements here, this down candle, up movement below this low, that becomes a bearish breaker. Right? So we're stuck in sideways movement, right? And we're able to identify a couple different factors. And we're just at this moment watching what is going to be more reliable off the heels of this huge rejection, which I believe is manipulation within the higher time frame potential narrative that's going to end up seeking sell side within the higher time frame manipulation on the weekly, monthly, and quarterly overall perspective. So yeah, this here turns that breaker interest off, bullish. So now we're here monitoring this, and this is what I would prefer, right? I've been preferring shorts, leaving an allowance for being flexible for trying to take a buy if it showed like it did over here. It has not done so here. So yeah, we'll see what happens if we can get below this low. We got this fair value gap here. Seems that it has now overlapped that whole fair value gap with this one. So let's see what it wants to do here. All the other indices are falling. It's pretty interesting. See how this is treated in here. Trump will announce today. What is Trump gonna announce today? Am I missing something? Maybe. Yeah, nothing in here is screaming for any type of opportunity at all. So we're gonna have to just continue to wait. Yeah, it's unwilling to try to go lower, so that breaker never manifested. Something that we were going to watch, but it never came to fruition. This one has been really pushed into, so yeah, looks like the likelihood of these equal highs getting taken have turned out to be more likely than I was wanting to anticipate. I wanted to see us be more weak or more interested in down delivery, but DXY just has not continued its momentum higher, right? It just came right back. That's the thing. We're inside of a consolidation still. It's a meat grinder, like I said. So yeah, hasn't really manifested anything other than this, right? The moves from earlier, those were the best moves, at least up until this point. Yeah. And so let's watch this first presented fair value gap from this current hour. Let's see what it wants to do. So this high, low, higher high. Price is still staying above that delivery. If we get up above this high, again, that's going to be very, very likely that the buy side up here is going to be targeted. We have another potential contingency plan based on, if this does fail to get up there, right? Say it doesn't decide to go up there, we are sideways, right? But if we were to displace below this then becomes a breaker, becomes a bearish order block. But, and that would be the only time I'd start to even consider looking at a potential short. This one didn't manifest. This buy would have been kind of uncertain, right? Because there is SMT still. There's still SMT at the highs with the like this run here. So yeah, I'm personally just gonna sit back, like I've been just staring at certain things, trying to see if something will unfold, and I'm not comfortable trying to take a trade in this consolidation. Now look, and you see DXY now finally starting to somewhat turn around here. So Nasdaq and the other indices may literally just be waiting for this DXY to open up, which it makes sense. So yeah, we'll just continue to see. Remember, days after a holiday are low probability, like I've mentioned. So it's not unreasonable for them to do this type of, jerky price delivery. Low resistance to very high resistance, like aimless. Not really interested in doing much of anything. So yeah, we'll see. Watch this fair value gap here. Obviously, if we don't take this low, this fair value gap should hold price. The new week opening gap should hold price, and then we should get up there. But I am personally going to continue waiting. Yo, what's Trump gonna announce today? Is there a meet? Oh, he is, yeah. See, so if we go to this, maybe it tells us. January 1st, impact the same counter. Yeah, I don't know. It's the second. That's not very helpful. It doesn't really tell us what he's going to talk about. Oh man, like my eyes are on fire. Like, it's so crazy. Yeah, it looks like that's holding up here. It looks like it may complete this as the market maker buy model, but that goes against what the 30-minute and 1 hour is potentially showing us in terms of this order block and a fair value gap holding in price. So we can map that out. There's a little added layer of context, you know, kind of like where price is at, what it's delivering in. And that first presented for value gap from the start of the 7 o'clock hour, silver bullet hour. We'll see if that becomes significant. But yeah, it's kind of just fizzled out here. It's kind of slowed its roll. I'm going to wait till 7:40, 7:45, see if something can happen that can be worthwhile. But yeah. So do you guys have any questions about anything? But yeah, with price just pumping up like this, or unwilling, I should say, to go to these lows, again, the favor is up here, right? And we have to continue to monitor how it's going to behave with this, given the higher time frame narrative and the stuff that we've painted. Potentially pushing price lower eventually. You know, we got to kind of look at this with a grain of salt, right? The move higher here. DXY unwilling to go to the buy side though, and just continuing to try to really push lower. That gives this jet fuel, rocket fuel, to keep punishing the buy side. So yeah, we'll see if we can get outside of that. So yeah, in my opinion, there's really nothing worth pushing. I mean, the risk of this topping out here and using this 1 hour fair value gap in the order block as the liquidity pool being these up here, but as the PD array that may trigger in a rejection here if DXY was to continue holding this run higher, which, you know, we're assuming that it's going to eventually do. It may, you know, take a little while. It's interesting that Trump's talking later. That wasn't announced early on, right? It's just something that they just threw in there, like this morning. So it kind of throws a wrench in things. I don't know what he's going to talk about. I wish I knew what he was going to talk about. Because if I knew what he was going to address, we'd be able to kind of make an assumption of what could potentially take place. But it's just like, I don't really know what the hell's going to happen. I don't know what he's going to talk about. Yeah, for sure. Yeah, I agree, Tony. It's always going to be important. Sunday. Not everybody's Sunday analysis is going to be useful, but the things that we do, the stuff that we observe and how we do the weekly prep call, I mean, they're all important elements that will help you continue to build trust and hold on to your narrative as price goes through the week, even if price goes against you, right? If nothing's changed within the weekly prep call, the higher time frame analysis, there's no need to flip-flop. It just means either take a counter trend trade if you know how, or wait, And today I've decided for my own trading, it's good to just wait because I want to catch a sell. I want to catch a massive decline going into that weekly fair value gap, and then I want to catch it back up. Obviously, if it offers it as a result of the rate cut, because that's bullish. So, we'll see if we can get that. All right, so like I said, we're now in 740. Notice how it's held all the way up to this point. So let's see what happens. So we got Nasdaq with the higher high. Dow and the S&P with the failure swing. So the S&P, if we do see something that shorts between these three, obviously because the Nasdaq made the higher high, it's going to be more aggressive to the buy side, right, than the other two. And it's going to be less aggressive to the short side because it made the higher high, right? Doesn't mean it won't go, right? Doesn't mean that it won't be something potentially worthwhile, but it's kind of just the way it is. That's how the relationship goes. I heard a trader say he didn't need fundamental analysis and missed 500 on stream. Wow. Yeah. It's sad. It really is. And people are so on a mission to get recognition and be popular and famous and whatever, and basically use traders' ambitions to sell some snake oil. That's what it is. All this crap that people talk about that they don't prove live, it's just all fake. It's all snake oil sales, and it's just unhealthy, right? So yeah, we're getting this decline now, so we may finally start to get ready. It's ironic that the timing element is now in place, right? And now we're finally starting to see price show much more interest in supporting a run towards the downside here. So let's see what that wants to do. Damn right. Shit. Freaking Tony. All right, let's see what happens here. So we have DXY stalling out at the low here that we created. And now we're just before the macro. 7:45 is when I generally look at the macro. Sometimes even execute, depending on what happens. So let's see what happens in here. And we got this behind us. We got the SMT at the highs, or the liquidity pool behind us. And now we got DXY finally showing us a little bit of life. Not as much as I would like. But now, if we take this, not really, actually. Let's see. We do got the overlapping fair value. So the only way that I would personally look to maybe frame a buy is if we get back above this, and then I could take that as an inversion and then take write it up to this up here. Otherwise, I'm looking at this as a short. It may not have to come too deeply into that. It may not try to, move itself through this. It may just leave that available. We got low, high, lower low. This is a bearish breaker. See if it can't give somewhat of a response there. Let's see what happens, guys. Let's see what happens. That fair value gap is the 1 hour here. Okay, so going back over that and closing below it. Again, we could look at this as a retracement to the 1 hour area, 1 hour PD array, and then the overlap of this fair value gap, basically inverting. That may be something that could be worthwhile to the downside, assuming that DXY is going to continue to go higher. But yeah, we'll see. I'm a bit skeptical just about either situation. Just given what DXY is doing. DXY does not look like it's being very cooperative. Yeah, I will still stick to my main opinion, which is eventually getting us down, targeting the sell side. We'll see. We'll see if we have to adjust. I took a small short in there. There and stop simply right up in here. $21.13 or 2.13, right up, yeah, right up in there. Oh, that's nice. Look at that response. Look at that reaction. Let's see what happens. My freaking eyes are just brutal right now. I've never had my eyes so, like, I don't even know how to describe it. It's like sandpaper. Oh, man. Appreciate y'all bearing with me. Man, my freaking eyes are all messed up right now. So far, so good. So I could say from this low to this high, middle portion of that needs to be left alone. If it's going to go higher, of course, you know. Or go lower. Higher. So your first target would be here. Or your first target could be 20 to 30 points. Or that could just be your entire target. It's already kind of delivered that off of this. A little bit beyond, that's pretty nice. Oh, DXY is gonna come to life. Get the hell out of this sideways nonsense. Yeah, nothing's going against anything that we've just talked about, right? It's finally showing life for the overall initial narrative that we've been sticking to, because we don't flip-flop. We're flexible, obviously, when necessary, but when higher time frames confirming, you stick to it, even if that means you gotta wait. So did any of you guys take that short? Would already be a break even for me. Just to secure it. It should not have to come beyond this. Should be able to just stay below that, assuming that we're ready. So we will see what it really wants to do. Oh my god, not again, dude. Can you guys see? Is my webcam not up now? Can you let me know in the chat? Oh my god, dude. Can you let me know in the chat if my webcam is still up? I got a runner. Oh, you gotta be kidding me, dude. How annoying. Let me fuck. Oh man, I'll figure that out later. We're kind of in the middle of something. Oh man, I literally just got a new webcam because the other one was broken. Did the same crap. And of course, right when I'm in a trade, it chooses to do this. It's absolutely amazing. It never fails. The timing is very amazing for freaking everything. All right, well. Oh, that's so annoying. Sorry about that. I gotta figure out what the hell is the problem and why this keeps happening. But yeah, hopefully, let me see. Break even, till it delivers. Yeah, good. Especially you, Mike. You already smacked a buy, and now you're jumping into the sales. You don't want to lose any of the money that you made earlier. Very low leverage, absolutely. That's how you need to operate. It's either that or you just don't trade entirely. You just stick with what you already had. But yeah, we'll see if we can get this to slide. We've already gotten our 20 to 30 points offered pretty nicely. So yeah, we'll see if we could catch a runner. See if it could slide. Finally give us the energetic price delivery within this macro that we've been waiting for to the downside. It is coming back to this breaker that reacted earlier, so we'll see if it's going to slide on through it. We'd obviously want to see it slide through it, show little to no support. DXY is opening up. Hopefully that opens this up too. See what happens. Let's go look at some of the other indices. So yeah, they've all basically broke down below the lows there. God, this stupid webcam issue is pissing me off. I'm so, like, you guys have no idea how irritated I am right now with this stupid webcam. It's clearly not the webcam. So I bought a freaking webcam for no reason because it just happened again. Oh, man. Okay, let's see if we can catch this slide. Right, maybe it does. I really don't like these equal highs up here. The only reason that could still be something somewhat trustworthy is the SMT that's available within that, but we'll see. Again, the 20 to 30 points, that's all you want to demand. So if you have caught that, I would take it off and then just let it run. Or if you took like a couple contracts, take most of it off and let the one contract, or however many contracts you have left, leave them on to see if you can, maybe catch something that runs potentially. Because higher time frame, you guys already know the vibe. You already know what we're looking for in the higher time frame. So maybe we can catch a runner within that because it's Tuesday. The only issue with today being Tuesday is the fact that it's a day after a holiday. So a day after a holiday, you go into the next day lower risk, and you look for 20 to 30 points and don't even try to push too much because it's unlikely to do anything significant. But sometimes it does, but it all just depends on what happens. Yeah, and we got Trump speaking later, so we'll see. Yeah, notice how that open triggered in the rejection, and then the news came out, and the news started the decline. Consolidated, but started the decline nonetheless. Now, whether this is going to be short-lived and stay inside of this range, that is a possibility because it's a day after a holiday. I mean, you could technically look at this Nasdaq delivery as seek and destroy. Stops taken here. Buy stops taken there. And then it just returned back to the middle from this high to that low. Nasdaq set some relative equal lows in here. That's kind of interesting. Swept it out a little bit. Yeah, I appreciate y'all sticking with me today and bearing with me. Dude, my freaking eyes being on fire. Now my damn webcam turned off. But, you know, there's been a lot that we've discussed. Hopefully you guys have learned a lot. Or reinforced things, right? Became just a little bit more confident, because that's the goal. Every call is to try to get a little better, a little bit better, a little bit better, and then eventually you become a whole lot better. You know, and it's just how the journey goes. It's amazing. You just passed a small evaluation with 1 to 2 trades a day. Amazing. Hey, I'm telling you, bro. Tony, I'm telling you. I tell everybody 1 to 2 trades is enough. 1 to 2 trades is enough for you to succeed. And I'm gonna do that. Hey, so, Tony, if you can share that perspective and share your evaluation being passed with the group, I'd really appreciate it. You're a good example of taking good advice, applying it, and I think you talked to me about making some of the personal changes that you had to make as well. You know, so your journey is like a really good example. You're one of many, right? But you're very vocal, and I appreciate it. You know, because in it allows others to see the stuff that we do here is not, you know, it's not fluff. You know, we come out here and we really do the things that we claim. You know, said, you know, the whole entire year we've been pretty massively just crushing the market in terms of percentage and accuracy and consistency. And it's amazing to see that it's bled onto you guys, you know. And each day I have a new student telling me I'm doing better. And I'm just like, it's the reason I consistently get on, you know, and do it here on YouTube. And especially in my private group too, you know. Yeah, congratulations, Tony, for yet another spectacular achievement. And the best thing is you're following the rules and it's helping you get there. So it just shows that rules, some people think that rules take away people's opportunities, when in reality, they stop you from losing them. You know, you're not going to be perfect, but the rules, you know, they allocate flexibility for that. You know, and it makes you confident when you're able to trust yourself and know for a fact that you're not going to blow your account. You know for a fact you're not going to over leverage. You're not going to over trade. And you guys hop on here and do the same stuff in your own studies. And it continues to further reinforce the fact that what we do here is repeatable, it's accessible, and it's absolutely doable by you yourself. You know, any of you. You just have to follow the rules. And a lot of the rules are non-negotiable, universal rules that are literally there to prevent certain issues from happening that steal your opportunity. You know, in a nutshell, it's discipline. You know, and the rules force you to be disciplined. And me coming onto the chart, talking about this stuff every day, well, every day in my private group and every week for you guys here on YouTube, you see me doing it over and over and over and talking about the same stuff over and over and over. And you see my own results, you know, and then you're seeing students like Tony. There's been like one or two people that have come to me and have been consistent with me. Every single week there's been like 1 to 2 people passing funded accounts. That's a crazy thing to say. I mean, it's crazy for me to even see like happening, right? It just shows that people overcomplicate things, and simplistic things that are rule-based allow people to have a lot better outcomes. It's not learning more concepts. It's not knowing every single model. It's not using every single concept ICT teaches. You know, a lot of it has to do with risk and you controlling yourself and being organized and learning how to be organized and what's important, you know, and you know all the different components that create an effective ICT trader. You know, hopefully that continues. You know, I want to have more and more and more and more success stories, both here on YouTube with you guys and over in my private group. So yeah, just for completeness sake, live account. Took one small loss in there. Tried to buy. Right? Kind of it failed. And then I had the short here. Eh, 57, it's not bad. This is pretty much a break even in here. You see how they're so close. So 57 point gain today, live account. I don't demo trade. Nothing against demo trading, but you're not learning from a demo baller. Yeah. Yeah, it's a terrible cycle, Tony. People become um, addicted to the bad habits, right? And it just makes it harder. And I show 1 to 2. How many trades did you just see on my chart? 2, right? Like every single time you look at a thing that I show, I'm either going to have 2 trades, or if I won one and lost one, maybe I'll throw in a third. But if I'm going above 3 trades, clearly there's something wrong. I'm clearly not in sync. Something is wrong, and that has not happened for 2.5 years. The last time I did more than 3 trades in a day was literally like 2-ish years ago, 2.5 years ago. It's not worth it. Everybody that follows the 1 to 2 trades a day rule, you start to see improvements. Just that alone stops you from damaging your account, blowing your accounts, doing all this crap that keeps you so suffocated. Let me see if I can fix this damn whatever the hell I think. The webcam is just so irritating. It's so dumb too. It chooses to cut out right as I'm literally in a trade. The enemy works hard to try to be destructive. DXY is opening up. I guess I'll have to figure out this stupid webcam later. I'm sorry about that, you guys. But yeah, today's session has proven to be pretty effective, as usual. Let me see. Tony said, I have a live account that I use, but the real payout is... Yeah, 100%. There's nothing wrong with that, Tony. Rules are for a reason, yeah. And you break them, and it sets you back. It makes things harder, yeah. And that's the thing, too. Like, I always say this as well. If you make rules for yourself and you just refuse to listen to them, and you know why you should be listening to them, yet you still just continuously refuse to listen to them, what do you think that's doing to your psychology and your ability to trust your own judgment? It's subconsciously shattering any type of trust you have in yourself to not hurt yourself. So then what happens? You hesitate. You start to question and doubt yourself. And it's just a cycle that you have to constantly work hard to get out of. And some people don't ever get out of it because they don't make the changes they need to make. And so yeah, we called this buy in here. Said that was going to be a breaker in the moment. Talked about it. I didn't take it. And I personally tried to take this like retracement in here. Run on stop, shift the market structure. Tried to use that. That was a loss. And I ended up taking this all the way down. And it was successful. So yeah. Again, I appreciate y'all sticking with me today. I'm sure you guys had a lot to reinforce or just learn, right? Bastion said I also post my interest in the free group. Okay, perfect. Posted on the Discord. You made me see this for the business that it is, Tony said. Once mastered, it can replace your job and really change. Yeah. Yeah, 100%. It just takes a little bit of time to get there. It takes a little bit more time than a little bit more time for some versus others. But nonetheless, if you just stick to it and you do the right things, you'll eventually show up. You know. Post my cert in rising funding. Okay. All right, good, Mike. It's awesome. Amazing. Yeah, I'm proud of you, Michael, bro. See, and you came to me from YouTube. You've joined the private group, and now you just got a certification. It's pretty interesting. It's pretty interesting how that happens, huh? I mean, just simply on YouTube too, like people like Tony. I mean, it just shows that what we do here is unlike most of the industry. I'm grateful to have the opportunity to play a small role with you guys in your development progression. So, as much as y'all appreciate me, I appreciate you just as much. So, yeah. Pretty interesting how price finally got in line with our higher time frame delivery. If we were married to the fact that this was going to go higher and got away from our higher time frame bearish idea, none of the shorts would have even been able to be considered because you'd be scared. You think, oh, well, it's going to turn, it's going to turn. You know, we may just stay inside this range, right? But the likelihood of now this getting taken out, unless it was to break above this, it's became pretty unlikely. So yeah, we'll see how things unfold. But yeah, we're now beyond the time that I generally like to hold on to trades. So, you know, with that being said, and we're beyond the macros that I like to trade. We're kind of outside of our window for engagement because now we're approaching the lunch hour. So yeah, with that being said, I guess we will put a ribbon on it. Thank you guys again for hopping on and bearing with me today. My freaking eyes hurt. I need to go do something about this. And congratulations, Mike and Tony. You guys are turning into savages. And again, I'm grateful to be able to play a small role in your development. And everyone else, I appreciate you guys. I hope you guys were able to learn something. Hope everything made sense today. Hopefully you guys see that the Sunday calls are extremely powerful, and the stuff that we talk about, it just keeps us grounded in what price is going to do. Now look, price is opening up. I could have held it, right? You know, coulda, shoulda, woulda, but I think 60 points is enough. But yeah, so hopefully you guys learned some stuff today. Hopefully you enjoyed the call. You know, if there's ever any things that you think I can improve on as a live streamer, I'm always open to suggestions. Because, you know, I don't want everyone to be bored, but then again, trading's boring, you know, so kind of is what it is. And, you know, the right things are not always the funnest things, you know, but, you know, the things that are super fun or, you know, entertaining and whatnot aren't always the things that make money. You know, most of the time they're not, you know, so, and most of the people that are, you know, super flamboyant and out here causing a scene all the time, and every single second in the chart is like a roller coaster type of feel. they are training you to be emotional. They're not training you to come into the market like a sniper and have a steady hand ready to knock a other trader's head off so you could walk away with the bag. Okay, most of them are just there for entertainment value. And stuff that we talk about is easily applicable, right? And all it requires is you to keep showing up. And you see all these students in the chat right now. These are some students that have been with me for so long, and why do you think they've stuck around? I'm not the most entertaining person. I could be if I wanted to, but that's doing things wrong as a mentor. I feel like, things are exciting when they're exciting, but this is not a video game. This is war in this financial battlefield, and you have to be taught how to do things correctly. And that doesn't always come with a bunch of bells and whistles, me jumping out of my chair, like none of that stuff is necessary, and it's actually detrimental in many cases, So again, if you guys do have any suggestions for me to improve the stream, I'd be really grateful. I have students all the time that help me improve the Discord, both the free Discord and the private community. Obviously, I'm always still open for that type of advice too, because I want to make it as special as possible, because what we do here is special, and it's not like everybody else. And hopefully, your guys' time with me has been able to prove that. Again, we're going to go for the rest of the year, see if we can continue this hot streak of every single week, every month, knowing where price is going to go. We haven't been wrong yet, and we'll see what happens. Right? I have a pretty good feeling things aren't going to change. So yeah. So with that being said, guys, we're going into the lunch hour. Don't do anything crazy. Mike, that's amazing. You still got a runner on. Hey, by all means, squeeze the lemon as much as you can. Make sure it doesn't turn to a loser, and finish today with positive energy. But again, I hope you guys have gotten value. Hopefully you learned something, reinforced something. Any of that stuff is positive. And we'll be back again live here on YouTube on Sunday. I'll be popping in in the free Discord here and there. If you did get any positive results, definitely post those in the chat. I need to go make some food. My stomach's yelling at me. My eyes, my stomach. I'm a mess right now. But yeah, so and then my private group, I'll be live with you guys tomorrow as well. If you need one-on-ones, let me know. But yeah, that being said, God bless you guys. Appreciate y'all as always. Be safe, and I will talk to you guys on the next one. Freaking starving.